MCX opens lower after margins miss estimates. Although revenue came in above expectations, the management tells CNBC-TV18 that the enterprise balance sheet is the strongest it has ever been. They also say that FY24 will be the year of consolidation after strong growth in the last 2 years.
IT stocks follow TCS lower. All stocks trade with losses led by Persistent Systems and Infosys.
A strong rise in Jaguar Land Rover sales boosts Tata Motors order book. 2 hits record levels while brokerages CLSA and Morgan Stanley issue bullish calls on the stock.
Metal stocks continue to rally on hopes of higher demand as China reopens its borders. Gains should be led by Hindustan Copper, Hindalco and Tata Steel.
Science Arms and DLM files for an IPO. The issue will have a fresh issue of 740 crore rupees. May also consider further issue of shares up to 148 crore rupees.
Hello and welcome to Chartbusters. I'm Nigel D'Souza and joining me is Mangala Malu. Well, as we speak, the markets will have given back some part of the good work that we put on yesterday. We are hovering around that crucial level of around 18,000 odd. So let's see whether or not we can hold on to that. But for the time being, though, we've pulled back quite a bit. The Nifty bank, that's the one that's dragging yet again. It's been out of form for the last 3 trading sessions, and that could be the turning point. You know, if in fact it could cut its losses, then we could see a bit of a bounce as we speak. Well, let's get in Shilpa Rout as well for a quick technical check. Hi, Shilpa. Morning. What's your view on the index? We're trading below that 18,000 odd mark. The data points that came in post-market yesterday were quite encouraging, actually, in terms of the put writing, the institutional activity as well. Your sense on the index first up?
Good morning, Nigel and Mangala. Like rightly said, yesterday data point was quite positive, and I'm hoping that today also we will see a reversal from current levels. Nifty should hold in futures 18,000 and we should see moving upwards towards 18,150 zones. Likewise, Bank Nifty also with a stop loss of 42,000, you should see targets of 42,600 to 800 also for the session very likely. So I'm very positive, of course, going ahead for the day.
All right, positive going ahead for the day, though we've recovered a tad from the lows of today's trading session as well. What's doing well right now, Shilpa, is the entire FMCG pack. HUL has moved to the high point of trade. We're seeing some gains come by on Nestle as well. Nestle too has moved to the high point of trade. That's from the frontline end. And from the broader markets, United Spirits has moved higher, as has Godrej Consumer. Do you have any picks in this sector, and what are your other stock picks?
Yes, exactly. I have a recommendation on Dabur for the day. If you look at Dabur has had a very strong resistance at around 550 zones, which it is now has crossed and is sustaining. So for me, with a stop loss of 548 from current zones, you should look for targets of 585 to 594 in Dabur. My another buy would be Balrampur Chini. If you see, Balrampur Chini also has a very specific range in between 380 to 420 to 415 zones. So for me, again, it is a buy with a stop loss of 380 for targets of 410 on immediate basis. And we've also recommended the same at Prabhudas Leeladhar now via options. It is 400 call option trading at around 8.5 or 9 rupees, looking for targets of 16.
All right, Shilpa, thank you for joining in and giving us your views on individual stocks as well as the index, sounding more bullish on the index than bearish. Let's shift focus to our special segment where we get you a few ideas for profit now. And this comes in from our colleagues at Money Control Pro. Jitendra Gupta joins in.
Hi, thanks. Indian Energy Exchange, which corrected from high of rupees 320 in October 21 to currently at 140 a share, deserve attention considering, of course, the quality of the business, improving prospects and favorable valuations. Despite supply side issue, IEX has delivered good growth in electricity volumes traded in the quarter ended December 22. Easing supply side issues such as availability of coal and relatively lower coal prices help power producers to achieve higher volumes at lower cost, and this has attracted discoms and other customers who are looking to optimize cost. Pickup in generation and higher traded volumes at exchanges clearly shows that the growth is picking up gradually, which was a key concern about 2 to 3 quarters back. Besides, now with the higher contribution from the gas exchange and long duration contracts, volumes and margins should be better to support earnings. Moreover, today if you look at the market expectations are very low. Improving volumes and earnings hardly reflects in current valuations. Its PE multiple has more than halved from 75 times to currently 29 times its fiscal 24 estimated earnings in a volatile market, particularly in the light of buyback of shares. Stock offers very high comfort.
Thanks a lot for that, Jitendra. Well, for the time being, we'll slip into a short break. Up next, the management of Fino Payments Bank will be joining in to give us an outlook for their business going ahead. Stay with us.
Welcome back. Just keep an eye out on a couple of stocks from the broader markets. Interglobe Aviation continues to fly higher. It was doing well this morning and now has moved to the high point of trade. Gain of almost 2%. The other one giving it company is PVR. Hopes that maybe 2023 will see a slew of releases. And Avatar 2 actually was very well received as well. Has crossed, the collections of Top Gun 2. So we'll keep an eye out on all these counters. But let's talk about Fino Payments Bank. We do have Ashish Ahuja, the COO of the company, joining in to discuss the outlook for the business going ahead. Thanks a lot, Ashish, for joining in. I was reading an old report which was pegging the growth drivers for you in your company. And among them, the first one was your product mix shifting, in favor of higher margin products, CASA and CMS, which are about 17 to 20% of your, overall mix currently. You had a target of it going to 34%. Can you tell us by when? And once that happens, what could the margins on your business be?
So firstly, thank you very much for having Fino Payments Bank on your show. And you're right, these are two high margin products, and these are the ones that we've been really pushing hard, in the past 1 year. And we see that the growth that we're getting on these two products is really encouraging. We see that the number that you're quoting broadly in the range of about 20% is where we are today. And I think another about 12 to 18 months is where we believe that they would be at about a contribution to us around the 30% level.
Oh, all right. So that'll be encouraging then, Mr. Ahuja. What does it mean in terms of profitability? If you could give us a sense out there. And also your own banking revenue, I think it grew from around 62 to around 64% odd. Where is this number headed?
So let me put it this way. You see, the CASA growth is primarily getting driven by the number of accounts that we're adding new customers, as also the subscription income that is coming in basis old customers resubscribing to their accounts, because ours is a subscription-based product where we charge a one-time income for the year to the customer and give a very high value of transaction throughput. We have a very encouraging close to 60% subscription ratio coming back towards year on year, which adds to annuity income. And we're adding in the range of about 2.5 to 2.7 lakh customers on a monthly basis to the new to the NTB customers, which is new to bank customers.
Right. Could you give us a sense of what does your overall merchant population currently stand at? And you are adding them at what, 2.5, 2.7 lakh per month. So what is your plan, in terms of growth for your merchants?
So let's put it this way. From a merchant perspective, we are at about close to 1.1 million merchant base. And in the next about, I would say, 18 months, we plan to double this number at the run rates at which we are going. And the main focus is on ensuring the productivity of the merchants and adding new merchants naturally. So that's the run rate which we're going, and we're very bullish about this aspect.
Okay, all right. Your digital throughput, I think, is around 17%, right?
That's right. And Fino 2.0 is all about the digital this thing. We've seen a huge jump in the UPI numbers, practically 100% jump already compared to last year's throughput on the UPI side. So UPI last year was about 18,500 crores of throughput. We're already touching close to 20,000 crores in H1. So that's the rate at which UPI is growing. Plus, we're building a very concentrated focus on digital products for our customer base.
So where is this number headed, sir, the digital throughput number?
This would be part of the overall throughput of the company.
Okay, and what about your take rates? Another way to, earn more money is to get a higher take rate. Are you looking at increasing your take rate? What is your average blended take rate right now? And what does it go going forward?
So let's put it this way. So the it varies from across product lines, and that will depend on, like on the CASA side, it would range between 55 to 60%. CMS take rate would be broadly in the range of 0.23 to 0.24%. So it depends on product to product. And at a company-wide level, the margin is broadly in the range of about 31 to 32% is at a company-wide level.
Okay.
So naturally, the idea is to push high margin products and to keep looking and reconfiguring our price for our products, considering the market environment and competition in hand.
What's the CASA accounts addition you're targeting? I think you said you're talking about 2.5 lakh per month. For the year, I'm guessing you'll wind up with around 2.5 million odd. There's around 25 lakh. For this year and for next year, what should the targets be?
So next year targets are yet to be firmed up, but I guess the growth rate would be in the range of, I think we should be looking at about an average about 3.5 lakh accounts per month is what you should be looking at. And considering the fact that we've a huge digital foray, we just launched our digital platform on which fintechs can come in, book in, and open accounts on the fly for their customers. So those are the kind of steps we are taking to push CASA, as a product of the company.
How's business for you in the rural areas? I mean, rural penetration, the earlier conversation we had, you said that it's at 94%. And we are getting inputs from a lot of the consumer companies, etc. They are talking about some stress in rural areas. What are you seeing there?
So I don't see a stress in the rural area. In fact, I would say rural is the biggest contributor to Fino's P&L in that respect. 80-85% of our account opening or other product throughputs come from rural India. Considering that, I would say rural India is really on the up move, because when I look at the digital transactions, when I look at the data that we see within the company, it is 80% of my customers are reachable on WhatsApp. Practically 100% of our merchants are reachable on WhatsApp and other forms of social media, which basically means the utilization of smartphones by them. And hence, we are really, really rural focused. And, I think Bharat of India will really is moving towards, one, a digital side, and secondly is going to be the main focus for Fino.
Right. So then give us a couple of numbers then. Last quarter, your revenue was close to around 24.2 crores. Net revenue was close to around 9.9 crores. Give us a sense of where this number is headed with growth in the throughput that you're targeting, and where are your margins headed?
So I think margins are stable. In terms of the growth in numbers, I won't comment at this point. The results for Q3 are going to be out soon, and that's when we'll declare the same things.
And what about Capri Global? They've been, increasing their holdings in the company. Is there any plan for them to increase it further? Is there any corporate plan between the two of y'all?
I don't think there is any corporate plan as such, but I think I'll leave that to the CFO to answer at a later stage.
All right. Thanks a lot, Mr. Ahuja, for joining in and giving us all those details. Wish you good luck for the future.
Thank you very much. Pleasure being here.
With that, we will slip into a short break. Come back. We'll talk about all the other things in the market on the other side.
Welcome back. We're at the low point of the day, 17,950 odd. It's getting a little uncomfortable, actually, from a bullish perspective, because the Nifty bank is down 500 points. Remember, a couple of sessions ago, it took a support at around 41,880 approximately. So we're around 210 points odd away from those levels. Keep an eye on that one. This one needs to bounce from these levels. Otherwise, in fact, we could have a bit of a down session. But we're at crucial levels, both on the Nifty and the Nifty bank as well. So that's pretty important. On the option side, the 18,000 call, we're just 90 minutes into the trading session, and that's added more than 50 lakh shares, close to 60 lakh shares out there. So that's a very aggressive writing that we're seeing at this particular strike. Even the 18,050 call, that as well has added more than 30 lakh shares. So between both these two strikes, you have close to around 1 crore shares that have been added. Keep an eye on that mark. I think we'll have to get past that 18,070 or 18,100 odd mark to make a fresh breakout. For the time being, I think lower levels need to get protected. But let's focus on big boy, Reliance Industries. That's in focus on the back of a fresh note coming in from CLSA. Sonal joins us to fill us in with the details of that report. Sonal?
Good morning, Nigel. Well, yes, it's an interesting note which is coming in from CLSA on Reliance Industries, where they say that the stock price is nearing end of a consolidation phase that it really saw this time around. They have a target of 2,970 rupees per share. They say that interesting events which are planned in the second half of FY23, they may set Reliance Industries on its next leap. So, couple of instances that they have shared here. They will include ramp up of its FMCG business. We've been talking about that. The launch of air fiber for wireless broadband as well. The new 5G smartphones that the company will be launching will be monetizing pan-India as well. So that's a big trigger for the company. The standalone 5G network by 2023 end is something that they are bullish on as well. They also see chances for an IPO coming in for both Jio and retail in the next 12 to 18 months. And they expect a 75% jump in its retail EBITDA over next 2 years as well. So that's the big turning point for the company as well here. They are looking at more visibility activity on its omni-channel offering, which are the other positives for the company. So yes, they see that the consolidation phase for Reliance Industries could get over, and it will see a big re-rating in the coming months.
All right, Sonal, thank you a lot for that. So that's about Reliance, and if Reliance does get re-rated, perhaps we would see some further support coming in for our markets as well, which actually currently is looking for some signs of support. 17,950 is where we're at right now. But Lupin, amidst that, is one of the stocks which is higher in trade today. Ekta is here to tell us why.
Thanks for that. Well, yes, Lupin is in focus because they've received approval from the Spanish government for reimbursement for Lupin's drug, which is basically branded as Muscula. Now, this particular drug is used for the symptomatic treatment of myotonia, which is basically a neuromuscular disorder and is expected to be very rare. Now, this particular drug will be commercialized by their partner in Spain for Lupin. Now, what this does is basically it is positive for Lupin because the drug is approved for insurance reimbursement in Spain. Because it's a rare disorder, there are not many drugs available to treat this particular rare disorder. And hence, because of this insurance reimbursement, which is now available for Lupin for this particular drug in Spain, we could probably see higher sales on account of it.
Okay, all right. Thanks a lot for that, Ekta. Well, that's one of the stocks that are outperforming in an otherwise wobbly market. Well, Mangalam, you're tracking a couple of other stocks then. Safari, that's a stock that you're tracking.
Yes, Safari is the one that I'm tracking, Nigel. It's up around 4% as we speak, and that's primarily because the company's announced to the exchanges that they've started production in their Gujarat facility. Now, the Gujarat facility production was something that everyone was pinning some hopes on with regards to their increased capacity, and now it has come on stream. So it's not suddenly that it has happened. Of course, it has been in construction for a very long time, and now it's started its production. So what does it do to their overall capacity? In Gujarat itself, their current capacity was close to around 2.5 lakh pieces per month. This increases to 3 lakh pieces per month. So that's about a 20% sort of jump in their Gujarat facility itself. But their overall production capacity has increased by about 50,000, which takes it to around 5.25 lakh pieces per month, and that's an increase of roughly 10-odd%. The stock has been underperforming for the last 3 months or so, but remember, in the last 12 months, we've seen a big move on the counter. 6 months itself, we've seen about near doubling of the stock, and that's primarily on account of them gaining market share at the lower end from VIP, secondly, increasing their production capacity, and thirdly, the market share coming to them from the unorganized space itself. So as a result of which, we are seeing some further up move on Safari Industries today in trade. But Vivek also has some other stocks that he's watching. Vivek, what do you have on your list today?
Well, quite a few stocks that, we've been highlighting since morning. Some important developments coming in as far as toll collections are concerned. Remember, especially in North India, there have been suspicions of certain toll collections on the back of farmers' agitation. And one of the stocks that's definitely been impacted has been the IRB twins, so both IRB Infra as well as IRB Infra. Last year, also towards the end of the year, and even this year, they are facing some trouble as far as collections concerned. But what the management has done is they've given an exchange notification talking about the December toll collection. So December toll collection for IRB Infra is up almost 6% on a month-on-month basis and up 32% on a year-on-year basis. The base month is skewed by the fact that there was, for a certain amount of period, toll collections did not happen due to the farmers' agitation. IRB Invit total collections at 77.8 crores, which is up, almost flat on a month-on-month basis, up 18% on a year-on-year basis. Now, current month, December 16th onwards, they aren't collecting any toll, and even in the base month, of last year, there was for a certain period they weren't really collecting tolls. So JSW Ispat, some softness there in terms of the production. The total crude steel production was down almost 30% on a year-on-year basis. Coming down to ONGC, some positive news flow coming in. So now, some of the newspaper reports are indicating that the company's production at Russia's Sakhalin block, where the company has a 20% stake, will start resuming normalcy as far as its production is concerned. So the current production of close to 140,000 barrels per day will increase to 200,000 barrels per day. KRBL, some marketing initiatives that the company has come across to, switch customer preferences, and also in focus, these rice stocks on the back of the fact that some newspaper reports are indicating that the government may reallow exports of certain types of rice. Lastly, Tega Industries, some negative news flow. The CFO has resigning effective January 31st of this month.
Vivek, thanks a lot for that. Well, just keep an eye out on a couple of these stocks which are doing well. TCS actually has recovered almost 1.5% from the lows. So we are seeing that stock still in the red by about 2% but we've seen some recovery there. IndusInd Bank from the broader markets, from the frontline space rather, has moved into the green after staying in the red for most of today's trading session this morning so far. So IndusInd Bank is the other one. TCS still sitting with a cut of about 2%. IndusInd Bank is the other one that I'm talking about. From the broader markets, actually also watch out for rate gain. Rate gain is up, 6% from lows, up around 5.5% as we speak, open mildly in the red. And this week itself, the stock is up around 9%, and this month it's up around 14%. Of course, it has corrected a sharp amount from its 52-week high. It's down almost 40% from those levels. So maybe some bit of purchase from lower levels is what we're seeing on rate gain. Godfrey Phillips is the other one, which too has recovered about 3.5% from the lows, has now moved into the green. For that stock as well, it's been a good week, up around 7% for Godfrey Phillips in this week itself, which is yesterday and today so far. With that, we wrap up on this edition of Chartbusters, but you stay tuned to CNBC-TV18. Trading Hard comes up next.